All right, welcome in everyone to the deep dive. We're going deep today on New World Development, their 2024 annual report. It's quite interesting. They're really emphasizing this thing they call the artisanal movement, which, I mean, at first glance it sounds a little fluffy maybe, right? But when you dig into it, it's really about combining this craftsmanship and heritage and a sense of imagination and applying it not just to building properties, but to actually creating value for the communities around them. So I'm really interested to unpack that, to see how that philosophy actually translates into their business.
Yeah, I'm excited too. We'll be digging into the CEO's report, looking at all their different property projects, their sustainability initiatives.
Right.
So we can really understand, how are their different businesses performing? What's their financial picture look like? What's their strategy going forward?
And for you, the learner, this deep dive is really meant to be your cheat sheet. We're doing the heavy lifting, sifting through the reports, so you can get a clear picture of where New World Development is at and where they're headed.
Exactly.
Pinpointing the major trends, the key strategic moves, without getting bogged down in the weeds. We're looking for those aha moments.
Yeah.
So what insights? Okay, so let's just jump right in. One thing they keep coming back to is this cultural commerce model.
Right.
What exactly is that, and how does that manifest in their business?
So their cultural commerce model is really the driving force behind a lot of their success, particularly within their K11 portfolio, right? It's about moving beyond just traditional retail. They're trying to embed art, culture, creativity right into the whole shopping experience.
Okay.
And the idea is to create these destinations, not just, places to shop,
Right.
but places to experience something.
So it's not just about buying things; it's about the whole experience of
Yes.
being there, being part of it, right?
Exactly.
And it seems like K11 MUSEA is kind of the flagship example of this.
Yeah.
And their numbers look pretty impressive.
They do. They saw a 17% increase in sales year on year and a 20% increase in footfall. So it's not just people coming in, they're actually spending more, probably drawn in by the luxury offerings, the dining, the cultural events they host. And, that 97% occupancy rate really speaks for itself.
Yeah.
And they've got, luxury brands actually planning to expand their presence there.
That's a good sign.
So, that's a really strong signal that this model is working. It's attracting those high-value consumers. And you see it with things like their Night Market by the Sea event.
Right.
It really takes advantage of their waterfront location and creates this really unique draw.
And it's not just the high-end luxury market that's responding to this.
No, definitely not.
K11 Art Mall also saw some pretty good growth out there.
Right. Oh, yeah, for sure. They had a 16% increase in sales, 10% increase in footfall, and they've managed to maintain a 99% occupancy by really targeting those lifestyle brands that are popular with younger shoppers, those Gen Z consumers. And they're constantly adapting their tenant mix, bringing in new brands, pop-up stores. They're really in tune with those evolving preferences.
So it's not static. It's dynamic.
Yeah, they're keeping it fresh.
Yeah, absolutely.
So how about their K11 projects in mainland China? Are they replicating this model and seeing similar success?
Yeah, they're definitely applying the same principles.
Okay.
Shanghai K11, they've been focusing on diversifying their offerings with different popular events, cross-selling experiences. They've got a 94% occupancy rate there. So it seems to be adapting well to that market. And then Shenyang K11 Select, they've actually been collaborating more closely within the New World Development Group.
And that's helped them grow both sales and footfall with an 86% occupancy rate. They've also managed to attract a lot of regional first stores.
Right.
Which really broadens their appeal. They even highlighted that 14 of their brands are actually the top performers.
Wow.
In their respective categories in the Northeast region or the city itself.
Oh, that's interesting.
So yeah, each market's a little different, but this cultural commerce approach seems to be, taking hold across their whole K11 portfolio.
So it's translating, well, it's not just a Hong Kong thing.
Exactly.
Interesting. Okay, so the retail, the experiential side of their business seems to be doing really well, fueled by this cultural commerce model.
Yeah.
But let's shift gears a little bit and look at their more traditional property development business.
Sure.
How did that segment perform in the past year?
Well, that's where we see a little bit of a different story. Their overall revenue from property development actually decreased by 41%.
Oh, wow, that's significant.
Yeah, year on year. And the report specifically mentioned fewer bookings in Hong Kong. as the main reason for that drop.
Fewer bookings in Hong Kong. Okay.
Yeah.
So which projects were they relying on for revenue there?
So the main contributors in Hong Kong were their residential projects, Mount Pavilia, the Masterpiece, and also their Grade A office project at 888 Lai Chi Kok Road.
Okay.
Those were kind of the big ones.
And what about their property development activities in mainland China? How did those contribute to the overall picture?
Well, in mainland China, that segment generated HK $5,258 million. And this was mostly driven by their residential projects like Hangzhou River Opus, Guangzhou Park Paradise, Shenyang New World Garden.
Mm-hmm.
But here's a key takeaway for you. As of June 30th, 2024, they had HK $16.3 billion in unrecognized gross revenue from contracted sales in mainland China.
Oh, that's substantial.
Yeah, this revenue is expected to be recognized in the next couple of fiscal years, 2025 and 2026. So it suggests a pretty strong future income stream from that market.
Right. So they've got a lot in the pipeline.
They do.
That will be coming online soon. So looking ahead then, what are their plans? What's their strategy for property development going forward?
Well, they're planning to launch several residential projects in phases over the next year in FY 2025. They're also focused on speeding up the conversion of their farmland holdings into developable land, which could really unlock some significant potential down the line. And they've been pretty clear that their pricing strategy for new launches will be, in line with market conditions.
Right. So very much taking a data-driven, market-driven approach.
Exactly. Yeah.
Which makes sense in this economic environment.
Yeah.
You mentioned earlier their strategy for property investment in Hong Kong. How are they adapting to the changing retail scene there?
Yeah, so in Hong Kong, they're really focused on taking their cultural commerce model and enhancing it even further.
Good.
They want to address the changes in tourist spending and just the overall retail landscape. For K11 MUSEA, they really want to leverage that prime location.
Right.
And create better synergy with nearby attractions like the Avenue of Stars, Victoria Harbor. It's about creating that whole cultural hub experience.
Okay.
And they've got 7 major luxury brands planning to double their retail space in K11 MUSEA over the next 4 years.
So they're putting their money where their mouth is?
Yeah, exactly.
They believe in it?
They're not just talking about it, they're doing it. And then with K11 Art Mall, it's all about curating that mix of popular brands, creating engaging content, targeted campaigns that really resonate with Gen Z.
Okay. Very strategic. And it seems like mainland China is a big part of their growth strategy.
Absolutely.
Where are they focusing their expansion efforts there?
So they've got major flagship projects going on in several key mainland cities. In Guangzhou, they have their Guangzhou New Metropolis project, which will include office buildings, a K11 Select, and residential properties. That should be coming online in 2025. In Ningbo, they have the grand opening of New World Plaza Phase 3 coming up on September 28, 2024. That's going to include the Park by K11 Select Art Mall.
Right.
And then in Shanghai, they just topped out K11 Tower 2, so that's a huge milestone.
Yeah, those are major projects.
They are.
And they specifically highlighted their ambitions in the Shenzhen market.
They did, yeah. 2024 is when they're really digging into Shenzhen. They want to make it another core market alongside Hong Kong and Guangzhou. And their big flagship project there is K11 eCoast.
Okay.
It's going to have nearly 230,000 square meters of gross floor area.
That's massive.
It is. And it should be opening soon. So that's a major bet on Shenzhen's growth.
Yeah, definitely one to watch. So let's pivot a little bit. They also have hotel operations in Southeast Asia.
They do.
How are those performing, and what's their outlook for the hospitality sector in Hong Kong?
Well, their Southeast Asia hotel operations actually saw a 25% year-on-year growth in their GOP.
Okay, not bad.
No, that's their gross operating profit after they deduct the manager's fees. So it's a key indicator of profitability.
Right.
And it's looking good. They're also pretty optimistic about the recovery of Hong Kong's hotel and tourism industry.
Okay.
They think it'll be driven by a few things, like the opening of that 3rd runway at the airport, which should increase flight capacity.
Makes sense.
Over 100 MIC events planned for 2024.
Oh, wow.
And the expansion of the individual visit scheme from mainland China. So they're expecting more leisure travelers as well.
So all signs pointing to a good recovery there.
Yeah, seems like it.
One thing that really jumped out at me from the report was their commitment to sustainability and how they've actually woven that into their artisanal movement.
Yeah, it's really interesting that artisanal movement is now built on 3 pillars: culture and creativity, sustainability, and social innovation.
Okay.
And they're specifically linking their business success to creating a positive impact on society through this concept of creating shared value, or CSV as they call it.
Right, right.
They've got their New World Sustainability Vision 2030, their SV 2030,
Okay.
which has now evolved to SV 2030 plus Certus, and that's really driving their sustainability initiatives. And they're not just paying lip service to this, Time magazine. Actually recognized them as one of the top 50 most sustainable companies globally in 2024.
Oh, wow. That's pretty impressive.
Yeah.
So what specifically are they prioritizing when it comes to sustainability?
Well, their key priorities fall under three main categories. First, the built environment. They're looking at sustainable development, smart city technologies, energy efficiency in their buildings.
Okay.
Then there's people and demographics, where they're particularly focused on addressing the needs of an aging population. And then planetary health, which is all about mitigating climate change and promoting a circular economy.
And they've set some pretty ambitious targets for reducing their carbon footprint, haven't they?
They have, yeah. Their near-term science-based targets, which they're aiming for by FY 2030, are pretty significant. They want a 46.2% reduction in absolute Scope 1 and 2 emissions.
And just to remind everyone, those are the emissions they directly control for
Right.
their operations,
Exactly. And then they want to reduce the intensity of their Scope 3 emissions.
which are those generated indirectly from their value chain.
Exactly, yeah.
Yeah.
So specifically, they're targeting a 22% reduction in intensity from capital goods and a 29.8% reduction from downstream leased assets.
Okay.
And beyond that, they want to transition to 100% renewable energy for their rental properties in the Greater Bay Area by FY 2026 and across Greater China by 2031.
So it's a pretty comprehensive approach.
It is, yeah. They're looking at this holistically.
It sounds like they're not just setting targets, but actually taking concrete steps to meet them.
Yeah, they've got this low carbon investment fund to finance energy efficiency upgrades across their property portfolio. Like, for instance, K11 Art Mall is using these nanotechnology-based filters.
Oh, yeah.
And they estimate that alone will save about 50,000 kilowatt hours of energy consumption annually
Wow.
and reduce carbon emissions by around 19,514 kilog CO2e.
Okay.
They're also doing things to, build resilience against climate change, like assessing the financial impact of carbon pricing, using sponge city principles in projects like Ningbo New World Plaza to manage rainwater and mitigate flood risks.
Right.
And then, of course, they're committed to responsible investment, aiming for all their new and existing investments to align with certified sustainable building standards by FY 2030.
So they're really integrating sustainability into every facet of their business.
Yeah, absolutely.
Beyond environmental sustainability, the report also highlighted their focus on organizational resilience. What are some of the key areas there?
So they're looking at things like strong stakeholder engagement, good corporate governance practices.
Yeah.
They've got this new data protection and compliance committee to make sure they're handling data responsibly, and a group-wide cybersecurity committee. They've also got clear ethical standards, things like an anti-bribery policy and a conflict of interest policy.
Right.
And they're also really focused on employee well-being. They've got a hypo development program for high potential employees, and they're offering resources to support mental health. So it's a very comprehensive approach to organizational resilience.
Yeah, they seem to be covering all their bases.
Yeah.
The report did mention some of the challenges they faced in the past year, though.
Yeah, they did. They specifically talked about the decrease in overall property development revenue, particularly in Hong Kong, which, as we've discussed, is something to keep an eye on.
Yeah.
They also mentioned that they're reviewing their near-term science-based emission reduction targets because of the divestment of NWC-ON and NWSH.
Okay.
So that might change how they report their sustainability progress going forward.
All right, let's dig into the financials a bit now. What were the key highlights from the report? How did their property investment segment do in terms of revenue?
So their property investment, which includes Hong Kong and mainland China, brought in HK $5,197.2 million in FY 2024.
Okay.
Which is actually a slight increase from the HK $4,995.7 million they made in FY 2023.
So steady performance there. But as we discussed earlier, the property development revenue took a hit, right?
Yeah. It decreased by 41% year on year. mainly because of that reduction in bookings in Hong Kong.
What about the occupancy rates in their investment property portfolio?
So overall, the occupancy rates stayed strong. As we mentioned earlier, K11 MUSEA and K11 Art Mall in Hong Kong,
Right.
they saw great growth in both sales and footfall. Shanghai K11 also maintained a high occupancy, so those core retail assets are performing well.
Can you give us a quick snapshot of their balance sheet as of June 30, 2024? What were some of the key numbers there?
Sure. So their total assets were at HK 445,157.6 million,
Yeah.
down from HK 609,014.0 million in 2023.
Yep.
And this drop is mostly because of that disposal of NWSH and its subsidiaries.
Right.
Total equity also went down to HK 224,888.8 million from HK 274,092.8 million the year before. Again, largely due to that NWSH disposal.
Okay.
Their current liabilities were HK 923,958.2 million, down from HK 176,984.3 million in 2023. And non-current liabilities were HK 126,356,336.9 million the previous year.
Yeah.
So you can see that the disposal of NWSH really had a big impact on their balance sheet.
Yeah, that's pretty evident. The report also talked about the key drivers of their business performance. What were the main factors behind these results?
Well, the growth in their K11 malls
Right.
can be directly attributed to the success of their cultural commerce model,
Right.
the strategic mix of tenants they have, and the success of their events and experiences.
Right.
The decrease in property development revenue in Hong Kong, as we said, was mainly due to lower booking volumes.
Yeah.
Their hotel operations in Southeast Asia did well thanks to improved business activity in the region. And then that overall decrease in assets and equity is a direct result of the disposal of NWSH.
So let's talk about how New World Development is planning to create value for its shareholders.
Okay.
Does the report give us any details on their dividend policy or any potential share buybacks?
Yeah, so they do have a dividend policy
Okay.
that they adopted back in November 2018, and it basically says they intend to distribute any surplus funds to shareholders twice a year. But the report doesn't actually specify how much they'll be paying out for FY 2024.
Okay.
And there's no mention of any specific plans for share buybacks either.
So right now, it looks like their main focus for returning value to shareholders is through those dividend payouts,
Seems like it.
which will be guided by that policy.
Right.
They did emphasize, though, that they're committed to open and transparent communication with their shareholders
Yeah.
through their investor relations and their AGM.
Mm-hmm.
So taking a step back, looking ahead, based on what we've seen in this annual report, how would you assess the overall outlook for New World Development?
Well, it's clear that their artisanal movement and this idea of CSV are going to continue to be at the heart of their strategy.
Right.
They're also really pushing their expansion in mainland China, especially in cities like Guangzhou, Ningbo, Shanghai, and particularly Shenzhen with that K11 Ecoast project. So they're clearly betting on the growth of those markets.
Okay.
Their commitment to sustainability is another big factor.
Yeah.
With those SV 2030 plus targets and their recognition as a global leader in sustainability,
Right.
that's likely to drive long-term value and resilience for the company. And in Hong Kong, they're going to need to keep innovating in retail, keep evolving that cultural commerce model, especially in their K11 properties, to stay ahead of the game.
So what are some of the potential challenges and opportunities you see for them down the line?
Well, that decline in Hong Kong property development revenue is definitely something to watch.
Yeah.
The pace of recovery in Hong Kong's hotel and tourism industry is another factor that could impact them. And of course, the success of those huge projects in mainland China is going to be crucial for their growth. They'll also have to navigate the changing regulations in both Hong Kong and mainland China
Right.
and make sure they hit those ambitious sustainability targets. But, the strong emphasis on sustainability could actually be a big opportunity for them
Right.
to attract environmentally conscious investors and customers and to build a really strong reputation.
Absolutely, yeah. So as we wrap up this deep dive into New World Development's 2024 annual report, what are the key takeaways you want to leave our listeners with?
I think the big picture here is that we're looking at a company that's operating strategically in a really dynamic market. They're focused on creating unique retail and lifestyle experiences through this cultural commerce model.
Right.
They're going all in on the growth potential of mainland China. And they've woven sustainability into the fabric of their business, this artisanal movement. It's more than just a slogan. It's a philosophy that's guiding their decisions and shaping how they engage with everyone around them.
And on that note, what's one particularly intriguing thought that you're taking away from this deep dive?
What really stands out to me is just how deeply integrated sustainability has become in their business model. It's not just a side project, it's affecting everything from the way they design and operate their properties to their long-term vision. And it makes you wonder, how will this affect not just their environmental footprint, but also their financial performance
Right.
and how attractive they are to investors and consumers who care about these things. It really raises the question, is this blend of commercial success, cultural values, and deep commitment to sustainability, is that the future of development?
It's an interesting question,
Mm.
and one that we'll be following closely, I'm sure.
Yeah, definitely.
So this deep dive has been a great overview of New World development.
Mm.
But as always, there's a lot more to explore in their full annual report. If anything we've talked about today has piqued your interest, I encourage you to dig deeper into their financial statements.
Yeah,
Look at the details of their various projects. There's a wealth of information in there.
absolutely.
Thanks for joining us for this deep dive into New World development. We'll see you next time on the Deep Dive.
See you then.
Bye.